Hey guys, it's Fakola, and today I'm talking about one of my favorite topics, which is investing. On YouTube, I've seen a lot of people, when they're talking about personal finance, focus on budgeting and saving money. And these are important foundations of a good personal finance strategy. But I think the more exciting and the more interesting topic that makes a huge difference is investing. So in this video, I'm going to be talking about why investing is so important. Where you put the money you save is extremely important. I think it's a major differentiator on your ability to build wealth. If you're saving most of your money in an old boring checkings account earning 0.013% interest, when you have the option to be investing in the stock market that has traditionally gotten people about 7% rate of return, the option is clear, sis. It's really important to be very cognizant of where you're putting your money. It's great to have the habit of saving and the habit of budgeting. What's actually going to make a huge difference is where you put your money. And I'm gonna just hop right into this video explaining why investing is so important, especially in your 20s. I also want to say something before we hop right in. I know a lot of us haven't been taught investing in school, been taught investing by our parents. No one might have mentioned how to get started investing in the stock market ever to us, but I think that it's never too late to learn about investing and really take charge of your financial future. So without further ado, I'm gonna just hop right into the video. So my number one reason why I think investing is really important is because it's a good way to build passive income. I'm not gonna lie, this was the reason why I honestly got started investing, because I was looking for other ways for my money to work for me. And when I learned about how the stock market allows you to gain passive income, I feel like my world, if you're wondering what passive income is, you can see passive income as money that's being earned without your direct labor or without your effort. So you might see pictures of people lounging on a beach while they're making money. That's kind of like the example of passive income. You're not doing anything, but money is being earned on your behalf. When you invest in the stock market and you invest your money into different companies, it's the company's responsibility to increase profits and increase their earnings so that they can make their investors happy. And these companies are also very invested in increasing their stock price as well. But more tangibly, what is the actual income you get from investing in the stock market? There are so many ways you can earn money in the stock market. One of the most tangible passive income from the stock market is through dividends. You can see dividends as companies deciding to give part of their profits to their different shareholders. It could be quarterly, like the company might write you a check and provide you with dividends. Another way you can actually get income from the stock market is by selling your shares. Depending on what type of strategy you have, whether it's an active strategy or a passive strategy, you can earn money from just selling your shares at a higher price. This is another example of where you're earning income without actually having to do so much work. Why I personally like investing in the stock market is because there's a low barrier of entry. Other investments like real estate, one of the most popular investments, takes a lot of money from the individuals to actually participate in it. If you're trying to buy a one-bedroom apartment in my area, you would need a down payment of about $100,000 to $200,000 to hit the 20% down payment to acquire the apartment. That is a lot of money that regular people don't really have. But for the stock market, you don't need to be a millionaire. You don't need to have $100,000 or $200,000 to actually participate in the stock market, unless you're not buying Berkshire Hathaway. The chances are investing in stocks, ETFs, mutual funds are going to be a lot more affordable than other investment vehicles like real estate. Another reason why I think investing is extremely important is you get to take advantage of compound interest. I know that compound interest is this extremely mathy term that can seem very high level and hard to understand, but all compound interest means is that you're taking your initial investment, and that investment will give you some investment returns. And then the combination of that will give you investment returns. And then the combination, all of those things will give you investment returns. So you're getting kind of a snowball of investment returns from taking advantage of compound interest. And this seems kind of simple, but when you look at the power of compound interest, it's honestly mind-blowing the profits you can get in the stock market. There's an example that I saw online that really resonated with me, and I wanted to share it with you guys because I think it's a really powerful way of understanding the power of compound interest. So imagine we have three people who are trying to retire at the age of 65. You have person A who invests $1,000 every single month from the age of 25 to 35. You have person B who invests $1,000 a month from the age 35 to 45. And you have person C who invest in the stock market from the age 45 to 55, and they are all investing the same exact amount, which is $1,000 every single month for the same exact length of time, which is about 10 years. But person A is obviously starting ahead of all three people. So even though they are putting in the same exact amount and they're investing for the same length of time, person A ends up having about $1.4 million because of compound interest. Person B gets about $700,000 and person C gets only about $300,000. So as you can see, getting started early in the stock market can give you significant earnings. Time in the stock market really allows you to take advantage of compound interest because you're allowing your earnings to continuously compound and to earn more money. So I think this story basically highlights why it's so important to be investing in your 20s, because you're getting to put your money earlier before you need it, and you're getting to really spend a lot of time in the market and earn a significant amount. So it's really critical in your 20s to try to invest, because these are going to be the years where you can really make a huge difference in your financial future. And I know it's a double-edged sword because a lot of people in their 20s don't really have access to high earning jobs, but I do think that if you can set aside even just a little bit of money, it can grow significantly over time. So another reason why I really like the stock market is because it allows you to beat inflation. If you're kind of unfamiliar with what inflation means, you can see inflation as, if you've noticed, the price of goods are constantly increasing every single year. Inflation is about 3%, so the prices of goods and services are increasing by 3%. So the value of the dollar is reducing every single year. If you're putting your money in a checkings account, or if you're putting your money just at home, your money isn't growing the 3% to combat inflation. But if you're putting your money in the stock market, which earns about 7% on average, you can actually be beating inflation and your money isn't losing value. And the final reason why I really like the stock market is because of the tax incentives you can get from investing in the stock market. Let's think about it. The US system we know is designed for the ultra rich and wealthy people. So it's no surprise that there are different tax incentives and benefits for people who are participating in the stock market. When you're investing in the stock market, you have so many different tax advantage accounts that you can use, like 401k, Roth IRA, traditional IRA, you can use to reduce your tax burden by investing in the stock market. You can also get access to lower tax rates depending on when you decide to sell your shares, in addition to a host of other tax incentives that you can take advantage of if you're participating in the stock market. So thank you so much for sticking it through and watching this entire video. I hope you enjoyed it, and I hope I was able to convince you to get started investing. I also want to make sure that you stick around for part 2, because in part 2, I'll be discussing things I'm specifically invested in and walking you through my portfolio and my investing strategy. So make sure to stick around for part 2. Thank you guys so much for watching, and let me know in the comments, did you like this personal finance videos? I've been kind of reducing the personal finance content I've been making, but it's something I'm really passionate about. I'm happy to make videos on this topic as well. So thank you guys so much for watching, and I'll see you guys next time.